Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts, and here to take us through the trades, we've got Charles Moon of Prosper Trading Academy. It is good to see both of you. Charles, before we get into your first trade, I know you've got Roku on your list. Before we get into that, I want to get your big picture take on the market action. We've got a little bit of flagging today. What's your view on that in the context of the gains we've seen this week?
Yeah, and it's not a surprise, I think the market was waiting on, it clearly was waiting on some sort of deal between the United States and China. And, after that weekend meeting, we've seen nothing but risk on. We've seen really frothy movement, especially in names that are highly desirable. NVIDIA is the one that stands out and how far they've been screaming up over the last week. So I feel that the market's in a pretty comfortable spot. We're seeing volatility kind of ease. We're seeing more risk on, more grinding moves, but more demand that's been coming in. And really, the biggest testament to this is that, we've seen a lot of information, a lot of tweets being posted from the White House. And, while that may have shook the markets up before, the market is totally absorbing all news and just continuing to work higher. So, when we see this just strong grind, this is very, very similar to how when we started seeing in 2018 the trade war easing between the United States and China. We just went into a really strong and sustained rally. And, as long as there's some sort of deal that really comes from the finalization of this, it really looks like we're headed back to where we came down from, which is near the all-time highs in the markets.
So basically like a round trip. That's what it appears to be the setup to. All right, Charles, let's talk about the first trade on your list. You've got Roku on your list. It is down today. It's been underperforming the S&P 500 year to date. What's your view here?
Yeah, so it's at a really important inflection point, the 200-day simple moving average. This has been a very critical price level. We've seen stocks get very explosive. Tesla's another testament where they jumped through this price at 292 and exploded to 350 in less than a week. And so this is almost like a strangle play here, because if Roku struggles to get above 72.72, this is actually going to be a strong fade all the way back down towards around $67. It could even fall out as far as around $63 where they could fill that gap. Now, ultimately, if it does happen to break, this is where I could see it explode for almost 10%, maybe in a day or two, up towards the 78, 79 price. And if it continues, this is another name that could really jump towards 85. Roku is obviously a aggressively attacked, shorted name. And so this is also another name that could, benefit greatly from a tariff deal. I'm just trying to wait and see the price action at this level. Again, I like the upside if the market continues higher. If it does close above the 72, 72, I could easily see it getting to this 84, 86 range.
Okay, looking for that range there. So, Rick, take us through what you're paying attention to when it comes to the chart for Roku.
Yeah, 72 is an area that is standing out on the chart to me here. And the reason I say that is because if you look at this red line that we have going back, you can see that was a high point, a low point, low points once again. And then we broke above it, and then we encountered resistance and support at various times around this general level. That's 71. Then 72 is our purple 252-day exponential moving average just above this repeated support and resistance level. So the area where we are right now is also bookended to the downside by our orange 63-day exponential moving average at around 69. So 69 to 72 seems like a pretty crucial area for the bulls to overcome. If they were to break above this area here, the next test would be those highs near 82, the recent relative highs from early March. Then to the downside, if we were to break lower, 21-day EMA comes in just below 66, and then we have the lows here near about 60. Now, if we were to look at our other studies here, volume profile and standard deviation channel, we can see that there are some notable heavy volume areas that stand out. So once again, right around where we are now is a congestion area, a heavy trading area. The next area in question would be around 76 or so to the upside. Meanwhile, our point of control is quite a bit lower, near 59. A brief glance as well, a long-term chart. You can see we are very close to the low end of the overall range. Very heavy trading at these relatively low levels based on our longer-term chart.
All right. Okay, that's the chart for Roku. Charles, okay, I think we'll change the channel to your next trade from Roku to Reddit. Reddit under some pressure today. You liked that pun, didn't you? It is under some pressure today, but it had a big move to the upside yesterday. It is certainly underperforming the S&P 500 year to date, but on a year-over-year basis, much better picture. What's your view here when it comes to Reddit?
Yeah, I'm actually a little surprised at how deep it pulled back today. After the kind of, it looked very similar to like what a short squeeze would look like yesterday. And when it breached that 200-day moving average, you condense the time frame to like a 5-minute chart. It was almost a straight vertical ascension. And once it peaked out around 130, it started rolling back. And what I was looking for today is those buyers to try and come in and scoop at this 200-day moving average. Well, they failed to hold that level. Now, I was also looking for a hold around 118. In fact, now that they've turned back down to 115, it brings into these levels back as resistance. So for me, this isn't a dynamic play until it could actually set and close above this 120 price, 118 price, which is the 200-day moving average. But in terms of expectations, this is exactly what I would be looking for. Close and open above this level, an immediate hold. And if it does, I think that there could be another strong and very, very abrupt rally to come into the picture. If you look at Tesla, this is exactly the maneuver that they took when they finally closed above the 200-day. And then next thing you know, they're all the way up towards $350, which was the expected move. So, a stock like Reddit, it can move, anywhere from 10 to 20 points a day, depending on what kind of momentum it garners. And that's exactly what I would look for, that upside momentum to trigger once it could get above that 120 price and hold. But until then, we just got to be very careful here.
Okay, so tread lightly until it gets above that level. Okay, so Rick, why don't we take a look at the chart that you have and, see if we see some of those dynamics playing out based on what Charles is talking about.
Yes, in some ways a similar chart to our last one in that we are sort of stuck at a resistance area and we're surrounded by a lot of important technicals. So we can see here in this case, we've got a double top type of pattern near 125, our red line, very close to our orange 63-day exponential moving average. We didn't quite manage to make a good push above those old high closes, and now it seems like we have seen a bit of a rejection. We've retreated back to our trend line and the confluence of our yellow 21-day and purple 252-day exponential moving averages. So all that comes together right around 112 or so. So this could be a key area to the downside. Beyond that, though, lower, we can see we had our pre-gap high point and then a subsequent low right around 83. So that could be another downside area to watch. Notice the RSI, though, a long gradual downtrend here. And really, we had a lot of resets and a lot of price activity. I still find it kind of interesting, though, that this line that you drew across the highs is right about where we got rejected here. And now we're heading back down below that 50 midline here. So look for a break below our support and a break below the 50 midline on the RSI for a further bearish signal there. So we can see when we include our volume studies once again here, lining up with our supportive areas, a rather large volume node and another volume node just beyond that 159 area. So some heavy trading levels as well to watch.
Okay, so Rick, I can't quite see the close-up on that chart. Is 112 the support?
Yeah, 112 is an area where there's quite a few things coming together. Our moving averages, -1 channel, volume node, quite a lot of potential support there, yes.
Okay, Charles, any final thoughts on Reddit before we move on to your last trade?
Yeah, and again, if we get into this reoccurring bullish state where we're just going up and up, Reddit's one of those names. Again, I really felt like it was targeted pretty aggressively by retail traders and Wall Street because it's a bit of a laggard. It's trying to play catch up, so to speak. And so if the market continues to extend, it's eventually just going to drag Reddit up with it. And again, I think the key catalyst is really closing above that level. And once it does, again, this is one of those names that could really squeeze up very quickly. You know, you don't want to blink and miss it, so to speak.
Okay, so you don't want to blink and miss it. All right, let's talk about the final trade on your list. You've got AMD on your radar. AMD, the chart over this past month has looked quite different than, you know, what the rest of the year looked like. And it looks like it's having a different year compared to last year. Oh, by the way, you had Lisa Su at that big event with the president and the members of the Trump administration in Saudi Arabia. So take us through what your views are on AMD, Charles.
Yeah, you know, since NVIDIA and even SMCI, since they got really frothy with this AI initiative and this AI growth cycle, AMD has been kind of left in the dust. You know, NVIDIA kept talking about the chunky, large size billion-dollar orders that were coming in from all the major tech companies. And AMD was struggling to, you know, hit sales on the same scale. And, you know, it was kind of forgotten. It's just been slowly just drifting lower. There's been very, very little signs of life into this. And I believe that a big reason is because of the Amazon investment into AMD. It's not very typical that you see another large tech company buy into shares of another major conglomerate, but, you know, Amazon's investment is no small bite into the portfolio, so to speak. They invested a great deal of money, and all of a sudden, AMD got very explosive. Again, mirroring what NVIDIA did, and it's been a really long time since they've worked lockstep, kind of to the upside in the same form and fashion. So, you know, once it's recovered above this 50 SMA, I really love the actual short-term and long-term potential for AMD. I was looking for a pullback to 112. It would have filled the gap from just a couple of days ago. I expect buyers to be very responsive, looking to buy in very aggressively on small pullbacks. And then we're going to look to see what it does when it gets to this 126 price, which is the 200-day moving average. Now, this is a key level that AMD hasn't been above in months upon months. I believe the last time AMD was above that level was in October, late October. So getting through this threshold, we have to also understand that there's going to be a lot of people looking to short this stock. So they could anchor and get, you know, very similar. They could anchor and get above this price. I could see an explosive move and a long-term run anywhere from 140 to 160. 160 would be that gap fill. It'd also be the last time it was above the 200-day moving average.
All right, Rick, I think Charles set you up nicely for a look at the chart, especially given that comparison he made to NVIDIA.
Yes, 125 or 126, that general area is the first thing that I noticed when you look at this chart here, because you can see that that was the site where we had the high after a very small gap down and a subsequent high. It also lines up with our purple 250 two-day EMA, which comes in at 124. So quite a lot to consider at that level. And this is a chart where the horizontal areas stand out to me. So we had our high point at our pink line. Our low point gave us a short range near 115. This 115 level was resistance two more times. We had this rather long downward sloping channel that price was traveling in until we hit those lows. We have broken out of it and broken above our moving averages. Short-term white uptrend in play now, and RSI backing off a little bit. We're out of that overbought area, but still quite high here. And we're still holding on to that 115 level as well, which is a supportive point. So 115 lines up with the volume node. 100 lines up with another volume node and our moving averages. So those are supportive areas. Then to the upside, if we did break 125, volume starts to really pick up again around 140. So that could be the first potential consolidation point to consider.
All right, that's the point to consider. Thanks, Rick. That's our Rick Ducat, lead market technician, and Charles Moon, senior market strategist, equities, Prosper Trading Academy. Thanks to both of you.